Ark Invest dives deeper into its AI investments. Ark committing roughly $250 million in OpenAI's latest funding round. OpenAI currently accounting for about 5% of the total assets in Ark Venture Fund. Here with more on this bet in the AI ecosystem, we have Ark Invest CEO and CIO Cathie Wood, along with Yahoo Finance's Julie Hyman. Cathie, it is always great to see you. I want to start, Cathie, maybe a higher level question. You look at this space, a lot of, now well-known names, deep pockets, OpenAI, Elon Musk's xAI, Anthropic, Google. How, as an investor, Cathie, who's excited about this space, excited about this technology, how are you trying to just think through the competitive landscape at this point?
Well, what's interesting is many people compare what's going on now to the early days of the railroads or electricity. And, there were hundreds of companies that evolved during those periods, and most of them went bankrupt, actually. We are getting such clarity here because there are very few players who have the wherewithal and, I would say, the strategic vision to really move this massive opportunity forward. And you named the 4 companies. Interestingly, Elon himself named those as the 4 companies. That's very interesting. And the other thing about railroads is, it was geography by geography. This is global all at once, and it's happening so rapidly. So I think there's actually great clarity. I think when it comes to Google, one of the questions is, how is this going to impact search? Are there going to be more competitors in that space? But in terms of, the momentum behind foundation models, these 4 companies, as well as I would importantly add Meta platforms with Llama 3, an open source foundation model. Those companies are stealing the march, we believe.
Cathie, it's Julie here. It's great to see you. So as you mentioned, these companies have the wherewithal. They have the wherewithal because of people like you, right, who are willing to give them, to fund that wherewithal for them to build these models. It costs an enormous amount of money to build them out. And as has been broadly reported, OpenAI in particular is spending an enormous amount and not yet bringing that much in the door to meet those costs. As an investor, when do you start to put pressure on the likes of an OpenAI? When do they need to actually turn a profit?
Well, first of all, their revenues are tripling on a year-over-year basis, and if their forecast or guidance, reportedly, this is the number, is about 11 billion for next year and 26 billion or thereabouts the year afterwards, this company is going to grow quickly into profitability because we believe right now, or they're telling us, they have 250 million weekly average users, and they've got 11 million paying users. Now, many people think about paying as $20 or $30 per month, but as we're moving towards agentic AI, so agentic AI is very high value AI, meaning we are going to be able to say to our personal assistant, let's say a developer, develop me a marketing website for this company, and it will do it from beginning to end with just a little bit of human oversight. Compared to what we pay developers, we would not be surprised if OpenAI and others would be able to charge $1,000 to $2,000 per month once agentic AI becomes improved and becomes de rigueur, which we think is going to happen.
How much of your confidence, Cathie, in OpenAI comes down to your confidence in Sam Altman?
a lot of confidence. You depend on visionary leaders surrounded by great business people. I realize part of that question has to do perhaps with management turnover. And what we witness in companies that are growing very quickly from startup into scaling is you need a different kind of management team. So it doesn't surprise us. We always look at who they are bringing in and who they are retaining as talent. And we think one of Mira, the CTO who just left, I think she has built a very solid organization. And we love the fact that Sarah Friar has come in as CFO. I've followed Sarah since her Goldman Sachs days through Salesforce and Block. And she's an incredible leader. So to attract her spoke volumes to us.
Cathie, it seems like you're betting on all the horses, so to speak, when it comes to these AI companies, these companies that you're talking about. You have that investment in OpenAI, in xAI, Elon Musk's company, in Anthropic. There was some reporting that this latest funding round for OpenAI had some restrictions that asked investors to not invest in some of those other companies. Can you comment on that at all? Can you give us some insight?
Yeah, it was interesting. The FT ran an article on that, and I put out on X, that was not true for us. We already owned Anthropic and xAI. So I ended it with fake news, question mark. They obviously hadn't done enough homework to understand that at least we already own the other two.
Right. I mean, maybe there was something to new investors, perhaps. I don't know, but I am curious what that says. Even if it's not true, there seems to be, in some cases, competition between some of these companies that has risen to the level of personal, right? Or that there are clashing visions. When I think of Elon Musk no longer being in OpenAI and starting his own company because he wanted to go in a different direction here. As somebody who's invested in all of these companies, how do you think about the sort of clashing visions and in some cases clashing personalities at the top of these different organizations?
Well, I actually think it's good that they're not inside the same organization and that they're competing against each other. Competition is good. It's going to make this space more competitive and more effective, I think, longer term. So, and I know there's history and personalities, but I think this space is moving so quickly that each company is going to have its head down. And Julie, it's not that unusual. It didn't happen to us. I don't know what OpenAI said to others, but as we have started in the venture world, we started very recently. We're trying to democratize venture capital and give individuals with as little as $500 an opportunity to get into SpaceX and OpenAI, Epic, Anthropic, and so forth. So I think that we're looking to the future to see who's going to make this space happen. And so there's room for all of them. In fact, it's great that we don't have to pick from hundreds, only to see, bankruptcies, the result. So I think it's going to make, what I was going to say before is it's not unusual for venture firms to face that kind of request from a company if the partners in the venture fund are going to be sitting on the boards of these companies, right? Because there's certain information flow to which they will be privy. And from a competitive point of view, that's not tenable. We're not in that situation at all. Maybe others are. I don't know. I don't know of any other venture firm that has a member on OpenAI's board, so I just don't know. But I know we don't face that problem because of what we're doing and how we do it. But others do face it, and I don't think it's unusual, frankly.
Cathie, do you think Sam Altman and OpenAI ultimately pursues an IPO? It would seem like a good bet. They need obviously they need a lot of money. You'd be hard pressed to think regulators in Washington would ever let big tech acquire them. So I'm curious, IPO, and if so, any rough sense of timeline in your opinion?
Yeah, it's interesting. A lot of companies are staying private longer. They just don't want to deal with the regulation in the public equity markets. And they also don't want to deal with the very short-term oriented or short-term investment time horizon of shareholders in the public equity markets. And we understand that. Many of our stocks have been hurt very badly as the traditional asset management world, went for the Mag 6. As I understand it, from Morningstar as of June, the average active large cap growth manager had 48% of its portfolio in the Mag 6. And I'm looking at that saying, oh gosh, that to me seems like a lot of risk, whereas many people are treating our portfolios, which are much better diversified than that, as the more risky portfolio. And it's true, we have a longer term time horizon, but when it comes to AI, that is what you have to have. So if the public equity markets start to become more long-term in their investment time horizon, as risk appetites pick up, as interest rates come down, and are less competition to stocks, then I think that the public markets will become more friendly. And sure, the investment dollars necessary to make this new world happen are quite significant, and the public markets are a great and efficient way to do that.
You alluded to the fact that not all your funds have done very well this year, particularly the one we track most closely, the largest of them, the benchmark Ark Invest Innovation Fund. We've talked about this many times. You look at a 3 to 5 year time horizon here, and your biggest investment's in Tesla, which has had not a good year. So, Cathie, how are you thinking about all of that right now?
I'll tell you, when it comes, Tesla is giving us great comfort, believe it or not, because we've done the research. I don't think a lot of analysts have done the kind of research on autonomous mobility that we have. We have a longer investment time horizon. That's why we've done the research. As we get to robotaxi day, 10/10 this week, next week, I think more and more people, analysts, are going to have to start modeling what this means. And I think as they do, they will conclude that this is a software as a service model with 80% gross margins plus on that side of the model, as opposed to 15 to 30% margins on the EV side. And they're going to have to adjust their expectations up.
Cathie, can I ask you though, because I think in theory, then there are some other people who have done that work and who have come to similar conclusions as you. I'm just not sure what we're actually going to learn at that robotaxi day, and how close, and maybe more from your internal comms with Tesla and from your research into the company. What are we going to hear on October 10th? And what is the timeline for all of this coming to fruition?
Well, I think they're going to fill in some of the blanks that we have about when they're going to launch and how they're going to launch. So that's going to become important. It'll make it more real. And I think that the reason analysts are probably going to take what Elon is saying more seriously this time, because remember, he's been predicting autonomous in the next 2 years for the last 5 years. And I'll say we expected it last year. So, but Waymo is now out there, and more people are trying it. This is not if, it is when for Tesla. And for Tesla, it's also how quickly will they roll out? How quickly will they go national or even global with their aspirations? I think, as you know, Elon thinks in a very big way, and he has positioned Tesla to win the lion's share of this market. And this AI project is a winner-take-most project. The company that gets people from point A to point B the fastest, the safest, with as little wait time as possible, is going to win the lion's share of the market. And I think when people see what Tesla's strategy is, and put that together with the fact that, wait a minute, Waymo's already doing this, so this must be possible. We don't have to worry about that anymore. How big could this be? Well, we publish our model out there, and it's on our website, ark-invest.com. It's on GitHub. And you can play with the variables to, if you disagree with how optimistic we are, to see how big this market is going to be. It's enormous. From a revenue point of view, the platform opportunity, those hosting these networks, and Tesla will be one of those, that's a $4 to $5 trillion revenue opportunity in the next 5 to 10 years, if our research is correct. And again, it's winner take most. This is a $1 trillion plus revenue opportunity for Tesla in the next 5 years. It's a big idea.
Cathie Wood, thank you so much for joining the show today. Appreciate it.
Thank you, Josh, Julie. Great to see you both.